Welcome back to today's podcast. We're going to be covering the regulatory changes and how we keep up amongst all of those changes within our sector and potentially the uncertainty that that's going to cover. I'm joined with me today with Mike from Anston Strathern. Welcome.
Thanks.
We've got John, our compliance manager here at Credas, and Luke, last but not least, from Keystone Law. Welcome all of you. So I think this is probably the fastest pace of change that we've had probably in the last couple of years, especially post-COVID. We know that the government has announced that regulatory observations are going to be changing, or supervision, sorry, are going to be changing from the SRA to the FCA. And I believe there's also been some announcements about changes in anti-money laundering regulations and those being updated. So I think if there's one thing that we've got right now around regulation and compliance in the legal sector is probably a little bit of uncertainty. We don't know where it's going to go, you know, what those changes are going to mean. So that's why we're covering that off today. And I'm going to jump to you first, John. So if we sort of set the scene and the transition from the SRA to the FCA and the money laundering changes that are coming up, like what's going on, what's happening?
What's afoot? We are seeing some enhancement. Amendments have been drafted to the Money Laundering Regulations. So they're due to be laid before Parliament later in this year. I think there's a big emphasis on trying to really bring the regulations, which were drafted nearly 10 years ago now, you know, more in line with what's available on the market, particularly in terms of digital ID verification. So we've seen guidance come out from DSIT, the Department for Science, Innovation and Technology, teaming up with HM Treasury. It wasn't quite as exhaustive guidance as I was anticipating, as I think others were, but what it does clearly say is that to use digital identity verification, it needs to be certified, and that needs to be certified against the Digital Verification Services Trust Framework, no longer DIATF. So that's really good because it puts DVS providers on a statutory footing and it puts the trust mark on a statutory footing. So for regulated professionals to be able to accept IDV checks, it needs to be by a certified provider. And I think that really gives reassurance to the regulated sector about what they can and what they can't rely on. So, you know, that's a big step. And I think another message and a sentiment we're seeing is really just trying to hone in the effectiveness of CDD and try and give a bit more guidance about when to apply enhanced due diligence, you know, when to apply really the more in-depth source of funds checks where it extends beyond ongoing monitoring and, you know, any inconsistent transactions or anything like that to, you know, needing to do it for PEPs, needing to do it for high-risk jurisdictions. And yeah, hopefully what we'll see with the shift to the FCA is consistency in the guidance across sectors, but also for it to still stay relevant to the work that they're doing, you know?
Yeah, exactly. And Luke, you've spent your sort of entire career under the SRA. I mean, what do you anticipate that the changes may bring if we move over to the FCA? And are there any sort of challenges and answer questions? And
I think we can expect to see much more data-driven reporting to the FCA. And what that will mean is that when it comes to the inspection, the audit process itself, it's going to be much more data-driven as well. Like, you will need to be delivering up statistics to them that probably not a lot of us are obtaining at the moment. What does that require? Well, that's going to probably be a lot more resourcing in this space, unfortunately, probably for the bottom line. But technology can absolutely have its own opportunity in this as well. I think sometimes where we are doing reporting of this type at the moment, Keystone has an Isle of Man office, for example, where I feed into that, and their obligations around reporting to the Isle of Man FSA is something like 400 questions long. Well, the last SRA questionnaire we got was 80 odd questions, and very much through text. It was a really poor form generally. Now, I dare say a lot of the larger firms are already operating at a level far higher than what the SRA are doing in this space right there, because they need to inform what they are doing on a day-to-day basis as well. Do I think much is going to change in the next few years? No, I really don't. I think there's going to be a kind of a period where we do move either from the SRA to the FCA. I think there has been quite a lot of pushback around FCA regulation of professional service providers more generally. Whilst the government's announcement to date has been the FCA is going to take over,
you wouldn't be surprised if it was
I
a change
really
in
wouldn't
that.
be surprised. I mean, we saw the draft money laundering regulations released at the late part of last year, and there was significant pushback in those around pool client account testing and what that meant more broadly. We've not seen anything. I've not seen anything of them since. I think that pushback hopefully signifies that government is listening in this space. I really hope that they are listening around professional body supervision as well. I know, Mike, your firm's Law Society of Scotland are regulated in this space currently. And I mean, you do have 22 regulators there right here, right now. Everything going into the FCA with what is a far more financially targeted regime, as it would be with the financial services sector, probably doesn't make much sense when it comes to your legal providers and your accountants in that space as well. Personally, I think HMRC as a supervisor here, especially of the sectors that they tend to regulate, that's probably where, unfortunately, that's where the money laundering typically is happening in my view, and where there can be greater supervision. But I think for me, it's about understanding that this is a holistic kind of approach that is needed here. It's not pitching lawyers against estate agents, against accountants, against financial services as a whole. It's about how we all work together as an ecosystem that understands that we together need to be fighting financial crime.
And Mike, from a leadership point of view, like that uncertainty is that, how do you plan for that? You know, do you plan from a compliance point of view as the regulations are today, or do you plan for the future? You know, going back to what Luke said and the uncertainty generally, you know, there has been pushback about the FCA. Maybe it won't end up into the FCA, maybe it'll end up somewhere else. Like, how, as a business and a commercial business that's here to not only help the people and the corporates you deal with, but make revenue, how do you plan for that and try and incorporate the uncertainty?
Yeah, I mean, you can't directly plan for it insofar as predicting what's going to happen. You can make some informed assertions of what it's likely to look like. So the big one that we're all talking about is the FCA being far more data focused, but we can't go away and plan for what exactly that's going to look like and how we're going to report and what metrics we're going to have and all that things, because we don't know. But what you can do now is have a look at your data architecture just now and say, can I even get things out of this? Or am I still working on paper forms or Word forms where it's actually quite difficult to get, you know, full data across your organisation? You can be working on that sort of thing now. So it's about doing the small amounts of things that you can do now without really hedging your bets on one solution. People in compliance work on the basis of, we never work with assumptions in our day jobs at all. When we're dealing with transactions, we work on tangibles. So my advice to people would be, don't change that now, wait until you know more. But if there are things that you can be doing just now because you know, or it's very, very likely that it's going to change in that direction, start taking some action, but don't necessarily make big sweeping changes, invest in time and money when you could end up building something that's not actually what you need under an FCA regime.
And I imagine when they do announce more information, they should announce a timeline, and hopefully there'll be enough time for firms to get used to the new reporting regulations and what's expected of them as well. So hopefully they'll help us out with that once they make a decision. But there hasn't been any timeline announced yet, is there?
No, not as far as I'm aware.
I've heard back end of 2027, but I mean, again, it's just that's guesswork. You know, nothing's been formally announced.
But even then, actual reportability on those standards, you're probably looking 2029 before that will actually take effect. I think there is an opportunity here. Like, we are expecting it to be much more data driven. That data can absolutely inform what you are doing today if you're looking to implement standards of an equivalent nature today. Like, that does feed into, well, actually, what are your client matter risk assessments telling you? What does that tell your practice-wide risk assessment? How does that inform that? How does that target about how you approach things more generally? So it's not a case of wait and see, but be strategic in how you use opportunities that are there right now.
Yeah, and I don't mean this in any negative way towards the Treasury at all, but they're still tangling with what the solutions are going to be. You know, it was only in December where they had a number of round tables across the sectors where they sat down and asked for feedback, and they got a lot of feedback, and a lot of the responses were good to know, we'll take it away, we'll work that out. So yeah, I mean, I think we can still see huge chunks of this that could either be done away with entirely or look drastically different to how people are worried that they're going to look. And yeah, we only can react to the things, the information and communications we get at the time, which is likely to be a way off.
I think we need to recognise as well that this sits in a wider geopolitical kind of position. I think the government's expectation around growth was far greater than it's actually turning out at the moment, and let's face it, more regulation is not going to increase growth in this spot. Then you've got Iran and everything going on there in the Middle East and how that is impacting the economy more widely. It wouldn't surprise me if this is parked for a little while longer still before actually anything worthwhile could be taken forward from it.
And one of the big critical unanswered questions for me, I think it was part of the consultation on the regulation changes, as they asked private sector firms what their costs were around compliance. And I understand that was with a view of actually telling the regulated sector how much the regulated sector is spending on fighting financial crime. And I think we'll all sit here, you know, the best world in the world, knowing that that's going to be many tens or hundreds of or even billions of pounds being spent for probably not the same returns. So I think once all of that data starts coming in, we'll get a much better understanding of where things are going to go. But it's everything's up in the air, I think, quite frankly, at the moment.
Yes.
Certainly with those draft money laundering regulation changes around pooled client accounts, one of the big things I took away is that actually it's not going to it's going to increase massively what the banks are expected to do in this space as well. That is going to mean that there's competitiveness around quality candidates in that spot. It's going to drive up salaries. It's going to drive up costs across the board, because the cost of operating a pooled client account will just be factored into it on a day-to-day basis. Well, when you've got, there's another thing going on here as well, which is around client interest, and the government has their eyes on that at the same time, where it shouldn't be a factor in how firms are profitable. But all of this is impacting the margins around the edges. And the more you impact on that, the harder it gets for a business to be viable. And equally, that impacts on wider kind of justice. If you are driving participants out of the market, then it just isn't going to end up in the best place for the legal system as a whole.
And it's the ripple effect that it causes, not just on the people directly affected by it, but the consumers and the clients at the other end of it, because the costs will just be factored in, as you say, and then that will then have a knock-on effect in how much it costs to buy and sell your house, because the costs will need to be passed on to the clients at the end of the day. So there is a big part of this just now about saying, well, actually, how is this going to adversely impact growth, the economy, the agenda for promoting small businesses? It all just seems to fly in the face of that.
Yeah, the skeptic in me is kind of aware that the fat of mutual evaluation is around the corner effectively now, and what this might effectively be is pretty much saying the right sound bites at the right time to place us in the right place for that process in 2027. So don't ignore what's going on, but certainly scan the horizon as a whole.
Yeah, and I think the regulatory landscape has changed so much since the last big change in 2017, but so has financial crime. You know, with the likes of AI and everything that we see now, it's not the same landscape as it was 10 years ago. And neither is the technology either. And we can probably say the regulations haven't kept up with those changes in tech, the changes in in, you know, the threats that we face day in, day out as well. So, Luke, do you think maybe a fundamental regulatory review of everything is you know, on the horizon, or we should do it or shouldn't do it? And I don't know, should we be starting again because the landscape has changed so much?
You're exactly right. The landscape changes all the time. We can do everything we can. We can refresh everything that we're doing here. We can start afresh, start anew, but they'll just find other ways. Like, that's what criminals do in this space. Now, I actually think the regulations in how they're drafted work fairly well. It is about emerging threats. It's about being reactive. It's about the right sectoral or national guidance in these spots. I don't think an awful lot needs to change around the regulations themselves. It's just, are we communicating that as well to your high street firms as you are to your national firms, for example? Because quite frankly, your high street firms are far more likely to be subject to impersonation kind of threats in that space, because they don't have access to these tools such as Credas and others in space to identify when actually a passport might come through as a certified copy, but you cannot know if it is a legitimate document or not. Big firms are able to put it through the right testing as part of this. I think the more we open up that technology to all firms, then the better and the stronger we can set the scene for everyone else.
Exactly. Any thoughts on that, Mike?
I mean, yeah, the direction of travel is definitely more regulation rather than less, and more change and more pressure on the private sector. We're seeing that outside of, you know, AML regulation over the last sort of 7-8 years with anti-bribery legislation, specific tax evasion offences, and we're now seeing that with the new failure to prevent fraud offence, which is kicked in as well, which has a couple of other subtleties to it that affect, you know, small organisations as well. So you can definitely see the net widening beyond your typical banks, lawyers, accountants, estate agents, and you're now seeing it much more at the forefront now of organisations who up to this point have never had to tangle with these things. So there definitely seems to be an appetite and desire at a legislative level to, I don't know, spread the load. And I don't know necessarily whether or not that's a sustainable practice for, I guess, the UK economy. You know, but we're not the only ones doing it. You know, you've got to just look over the water to Europe with 6 MLD, and how much that's changed. How our counterparts in the mainland are doing things as well. That's been much more significant in wholesale change. So we're not the only ones doing it. Which, yeah, I think it's just a bit.
Australia are introducing their money laundering regulations, aren't you? You're just saying, and you know, yeah,
there's quite a few countries actually copying what we do here in the UK, because I think we do set the standard as well. You know, we often criticise the sector and criticise the amount of compliance we've got to do, but I do think we are almost world leading in it as well. You know, and with Australia, you know, mimicking what we're doing, I think South Africa are going down the same route as well, and the Middle East, some of those countries. You know, I think sometimes we've got to give ourselves a bit of a break as well. You know, that we are doing things to the best of our ability, and you know, they do work as a whole as well. And like I mentioned in previous sessions, you know, we are fighting financial crime here, and that's keeping criminals off the streets and away from our kids and our community. And we don't need to forget that as well, I think.
Yeah. I mean, at a spiritual level, I'm absolutely on board with the safety elements, the crime fighting elements. But I think the commercial part of me kicks in to say, but at what cost are we doing that? Yeah. Are we getting bang for our buck? And I don't think we are. And I think another part of this for me is, you know, if we actually think back to what the purpose of legal representation is, I think I worry slightly that some of the things that we're seeing is eroding, you know, the value of the solicitor, the value of the solicitor-client relationship, and actually it's starting to introduce some points of conflict between, can I actually do the right thing by my client anymore because I've got so many of these regulatory hoops to jump through. So while I'm all for good regulation, I think it needs to be balanced with what is the what's the purpose of a solicitor at the end of the day.
That's such a good point, you know, because you don't want to regulate people out of the profession, and consumers out that client solicitor relationships a special hallowed thing. You know, people need to be able to trust that their solicitor's going to act in their best interests, and not only in the best interests of HMRC, but there is a big regime about that as well, and a big part of this is preventing tax evasion, and I'm certain that HMRC have agents embedded with the NCA, to prevent wider economic fraud and tax evasion, as well as the more sort of money laundering and focused offences that we see. So it's interesting.
We've got to remember that this is about giving the public access to justice, access to experts to be able to work within the law. I don't think we're quite there yet, but I think there's a few initiatives where people are starting to think, well, actually, you're eroding our purpose here, and that could be dangerous.
I think there's balance here as well balance, certainly it's not the right word for it, but if things do move across the FCA, you have solicitors then who are effectively regulated by both the Law Society of Scotland, in your case, by the SRA for other aspects as well, but then also the FCA at the same time. And typically these things don't happen in isolation. Your money laundering offences might be connected to your client account breaches, and you've got double jeopardy that plays into this. Who's the right investigating body for it? There's just what has happened there today. There's no clear thought as to, well, what does this impact solicitors on a day-to-day basis, and are we driving people, as you say, out of the profession, rather than thinking, well, actually, this is an opportunity for me to grow and do what I want.
Yeah. And we talk about culture and tone from the top as well, and we think about that at an organisational level, but at a national level, for me, the tone's very much set at the topmost point of all this, which is Treasury, who are responsible for directing it, and I think sometimes they should be slightly more in tune and a bit more accountable to helping us at the sharp end of things with that cultural mindset. I think a lot of what's happening at the moment feels as though we're victimising the regulated population, and we're doing things to them rather than doing things with them and for them and to help them.
This is it. I don't find that there's so much collaboration, from the SRA. They're not. I don't see so much support as I do enforcement and sort of knuckle rapping. There's a lot of fines and things like that, but I mean, really, it's like with the SRA inspections and things like that they do to publish findings and to give guidance off the back of that. I think is really important in terms of liaising with the regulator and it going both ways, rather than just it being this big stick that they wave.
To a certain degree, they're struggling with this as well, because they have things done to them again, because they are 1, 2, 3 steps below the decision makers at the top of all this as well. So I can be critical of our supervisors across the board, but I do still in my heart think they've also got a very, very difficult challenge ahead of them as well, because they've got the downward pressure of results, and then they've got the upward pressure of the profession, because we give as good as we get at times, and I just think as the further up the squeeze seems to just get that little bit harder for everyone in it.
I think Sarah Rapson has just come in as the new head of the SRA, and I think her recent comments at the Risk and Compliance Conference being around, well, actually moving away from that pure enforcement strategy. I know it's not a pure enforcement, but it's felt that way. It hopefully will cultivate a profession that feels supported, and actually what it's trying to do now, hopefully, is get us to a place that is more acceptable, risk-based, defensible in terms of what we're doing in that spot, than where it certainly felt so far, which is we've spotted something and we're going to enforce against it. You don't get results by hitting someone with a stick 10 times. Just nine.
And on that note then, I think on the other side of the coin is the SRA have actually been criticised for being too close to those that they regulate. So Luke, do you think moving over to the FCA would sort of give a bit of distance and maybe some more rigour as well?
I don't know who said the SRA feel close to the profession, but I don't feel close to them. I think it's there's an inherent conflict of interest in all of this. The SRA is regulated from an MLRO money laundering perspective by OPBAS, which is itself a division of the FCA. Now, what we're seeing at the moment is this talk about moving over to the FCA as the regulator. Well, OPBAS, if you're looking at conflict of interest, they'd be very keen on that because it's part of who they are part of already. I think everyone just needs to step back a little bit and think about what are we actually trying to do here, which is stop financial crime generally. And we're thinking more about what's the right regulatory approach rather than what's the right holistic approach to this. I go back to, I don't think the FCA is probably the right regulator for professional services in this space. Do I think the SRA itself is the right body for it alone? No, I don't. But there is probably a broader, kind of a wider accountancy regulator that could be brought in, because there's 3 or 4, I think, in that space. There's certainly a lot more on the legal side as well, where you can take that approach to ensure that there is a clear standard in this space. I think where I've been seeing the SRA at the moment is that the regulations say what the regulations say, but the SRA gold plates everything because that they want to be seen to be doing the right thing. We all want to be seen to be doing the right thing, but that impacts upon the day-to-day results that you are getting, because you're bound up more in what the regulations say or the guidance says than what effectively is the right outcome for the client. We have to act in the best interest of our clients, and that doesn't mean we have to stop spotting financial crime, but put your resources where they need to be. On the more straightforward things, you do not need to be getting 6 months of bank statements for the 4 different accounts that they have and scrutinising them more generally. Spot the right things, escalate them appropriately, and have a profession that feels supported by the regulator in that effect.
And there's a big difference across even just the legal sector, right? So larger firms like yours and mine are probably looking for something slightly different from whoever ends up supervising them, to your high street firm that's sitting there going, I don't know what to do here, and hitting me with a stick is not going to make me learn it overnight. So actually they need a little bit more hand-holding and support, and to bring them up to speed with that. And I worry slightly, certainly from a Scottish perspective, the Law Society of Scotland are different to the SRA. They've got a much smaller community, a much smaller population, and they are working very, very closely with the profession. So I worry slightly that we'll lose a lot of that support for small firms, and actually will just drive risk further into those, because the FCA can't possibly regulate, what is it, 40,000, I think they're going to go up to, I think it's like 15 or something at the moment, up to 40,000. How can they feasibly manage that size of the population consistently?
Yeah, no, I completely agree. And yeah, it's all big changes coming up, isn't it? So we'll see what happens. But John, the MLRRs themselves are actually under review at the minute as well. So what do you think the most significant areas are that the current regulations are falling apart or falling short on? And what changes do you actually think need to happen to make this better for everyone?
Yeah, thanks, Rhi.
Big question.
It is. I'm not going to attempt to redraft the money laundering regulations or anything here. I think it's difficult because you're trying to regulate and lay down statute about things that, as we've discussed, you've then got real people, central professionals involved in these transactions trying to deliver a service and adhere to the regulations at the same time. I think they could do with more clarity on certain areas, which hopefully we're going to see. So, for example, I'll talk about digital ID. This is something that has really changed the risk landscape compared to when the regs were first issued. And I think more mention there about what's acceptable and how how IDV can be used to offset risks and to identify customers to discharge Regulation 28 is very important. I mean, source of funds, it's been mentioned, source of funds is mentioned in about 3 places in the money laundering regulations. So a bit of enhancement there could really help fee earners and people understand what their obligations are and how far they need to go. The risk-based approach is championed, but guardrails around that is what the regs might benefit from doing, and what professionals might find easier to interpret. But yeah, it's a good question, and one that will take a lot of minds and a lot of collaboration between not only regulators but government, FATF, the whole ecosystem to contribute. And when the government do consultations on this, I think that's deeply valuable. We're seeing changes, with digital ID, and the government are focusing on that, and they've rolled out a very in-depth consultation at the moment with DVS providers across the UK who are able to feed in. So they're not just waving a stick and saying this is how we think it should be done. They're getting input from the professionals, the people, the experts who do this for a living. And I think any redrafting of the regs, that really needs to be done. It's consultation with people like Mike and Luke who do this on a daily basis, who are working with fee earners, working with clients, and striking that balance. So yeah, consultation's a really important part of it to inform any regulation.
I think it is. I think it's absolutely on firms who are going to be impacted by these changes as well, to be alert to those consultations, to get their responses in. I think sometimes we're all very happy to chunter about how the systems aren't working at the moment, but we don't offer solutions to that. The more people engage in these processes, they're happening for a reason, they're consulting for a reason, which is how can we do things better as a whole? And your high street firms are just as valuable in this consultation process as your big firms, and what they think it should be doing.
The challenges are different as well.
Challenges are so different, but that's not to say you can't build a system that works for both. It can talk about, well, we already see it with different financial crime legislation that work on if you have revenues over 36 million, then, well, why not? Why can't that be built into what the expectations are around risk-based approach and reasonable measures accordingly? The more you engage in this process, the better something can be designed that works as well for high street firms as it does for your magic circle.
A framework doesn't have to be one size fits all, right? It should reflect the different operations, needs, and sizes of practices. So yeah.
If we're talking about a risk-based approach, that's it.
If you'd allow me an absolutely wild idea, if we were going to restart this from scratch, I would half-baked. I probably couldn't stand up to much kicking the tires of my plan right enough, but I would nationalise it. A lot of us are paying into the Economic Crime Levy now, which is now tens of thousands of pounds, but we're spending hundreds of thousands of pounds in our organisations managing compliance on, lost billable hours, dedicated compliance people. I think law firms would bite your hand off to pay even a higher levy to do away with compliance within your organisations, and then
HMRC do it.
Law enforcement would have all the data they would ever want in their life.
Credas might cut that bit out.
Changing the subject politely, I do want to have a chat to you about a case that's recently been in the press where a sanctioned individual who's sanctioned on the US sanction list managed to purchase 12 properties in London with 17 parking spots for $17 million using a UK company and a Cypriot passport. So I don't think it can get more complex than that. But nobody domestically flagged it. And I'm just thinking, if this can happen under our nose, like, where are we falling short? Why are those cases still being allowed to happen? And that's to all of you.
I'll have a first crack at it. Sanctions is a strict liability thing. So unlike the money laundering regulations, you don't have lots and lots of things that you need to do.
Yeah.
So I think probably from that point of view, that's where the process is fallible, and I know there's big calls centrally to legislate more for sanctions, and then in some cases there's only so far we can go. So if I don't know exactly the ins and outs of all that, who was responsible for allowing it to happen, but if it was people who have genuinely made a mistake, then I think it comes down to good guidance around sanctions, because that's a very, very complicated area, and very, very niche in the anti-financial crime, family, if you like. It takes a very special type of person to go into that area and manage it well. We can't account for absolutely everything. And I tend to find that these high-profile cases are often much more complicated in reality than the headline-grabbing phrase that's been used to get people to click on the article. So, people in glass houses shouldn't throw stones and all that. So I don't want to cast too many aspersions on, my fellow colleagues.
You've got competing obligations there as well. Most UK law firms are not they're not obliged to go with OFAC sanctioned regime approaches. Certainly not with EU either. And what we have here is a smash of all those three concepts all together, which is, look, the regulations say what the regulations say. More generally, you do have to think about your reputational impact on acts on certain type matters as well. I like the concept of garbage in, garbage out. A lot of it is contingent upon what you are asking of your client in the first place, because that gives you the right tools to go out and do your own outside research around that point as well. The thing that I, as a MLRO, might say in this situation is, what was the bank doing? Because if this was a US sanctioned individual working in US dollars in terms of a deal as well, something absolutely should have flagged on their systems around that process. Now, that's not to say that the lawyers weren't in part related to this, that the estate agents weren't in part related to this as well. But that kind of brings together more of the arguments we've been making around not treating things in silo, about seeing this as a wider approach of what's the right thing to do here and getting people talking to each other in the right way. It's really difficult in the legal space where how privilege applies to this situation more generally. But source of funds, certainly the guidance that I've taken, your processes around that, it's not privileged material. It's not there for the purpose of the outcome of the legal advice that's being sought. What you're doing is you're establishing, does it meet a regulatory standard from a money laundering perspective there? So the more information that goes in, the more you can get out of that more generally. I think that's probably what I'd say is, don't be inquisitive. To go with something you mentioned earlier, Mike.
I think you touched on a really good point there, Luke. And, it's about the information sharing in the regulated sector is one of the greatest weapons to combat financial crime. And I think there's a lot of misunderstanding about that. I mean, the tipping off offence, it causes so much fear in regulated professionals about potentially giving them information away to a bad actor or to the wrong party, that they're not sharing information when it counts and when it can be used to prevent, financial crime, and from these, as the case you've described, from happening. I think the regs could pave way for more of that to be done and to promote that, but again with really, really safe, strict guardrails, which is where the challenge is.
Tipping off is only really an issue where a report has been made. So someone is already suspicious at that point, and it's around disclosing that knowledge or that report to potentially the party that's subject to it. Being inquisitive with your client, asking more information of them to get you to a point to establish whether you are comfortable or you're uncomfortable and you do need to make a report. There's nothing within the regulations that say you can't ask those questions of your client. And what we probably need to be better at doing is being forthright in actually, I need to ask you these questions because I am regulated for the purposes of money laundering and reporting purposes. Like, if it's all explainable, tell me why it's explainable. There's nothing wrong with that at all. If it's not explainable, your client will soon go away because they know that you're alert to this as an issue.
exactly.
And they're aware of it now, right? You know, they're getting it everywhere. Clients are coming along, they're getting it from their solicitor, their estate agent, their accountant, their bank.
Even insurers now,
even
when you get insurance quotes and everything, you know, like I follow my own credit reports and I'm going through house insurance renewal, cat insurance is like anti-money laundering check, and you know, and it's, I think people are definitely more aware of it now, and I think if we look back to 2017 when the legislation came in, or the biggest changes came in, I still feel that as a sector, the law sector were quite slow to adopt that, and I would probably say that people started paying attention maybe 2020 or even into COVID times. So do you think the new regulations and all of this change is a good time to reset everything again, or do you think that actually more law firms will just be behind the curve again? You know, like what happens or what I thought happens in 2017 anyway. I felt like a lot of law firms were ahead of the curve and were really working towards the 2017 changes, but there were still some that were still trying to catch up in 2020 and 2021. Like, what are our thoughts? Do we think it will be a good reset, or do we think it's probably going to hinder some firms?
There are still some firms, until quite recently, being investigated under the 2013 regulations, and what they weren't doing at the appropriate times then. There's always going to be firms behind the curve on anything in this space. I think a revolution will probably... It won't generate much goodwill from the sector. You need people to buy into this process, and we've spoken before about fatigue, around change fatigue. That's absolutely going to happen. Tinkering around the edges, bringing things up to a better standard without changing everything entirely is the right thing to do. When I joined Keystone, I think our practice-wide risk assessment was about 4 pages long. It's 97 pages now, because there is so much more to consider in this space. If you are going to ask me to rewrite that entire document to relate to another regime all entirely,
it's a massive investment.
It's a huge investment, while still dealing with the day-to-day.
Mike, your final thoughts to wrap us up?
My practice-wide risk assessment is far from 97 pages long. My goodness, that's a long risk assessment.
Font size 20.
No, I agree with what Luke says. I think change fatigue's a big thing. I mean, I think unless there's a realisation that we're spending too much money for not enough return on that investment, and we see things dial back a good way, then I can't see them doing wholesale change. A lot of the responses that we got in the last few consultations were, we'll defer this down to sector guidance. So there is already a sort of appetite to push this burden onto the supervisory layer, as we've already seen, and actually I think it's only fair to say that groups like JMLSG for the financial services sector and LSAG for the legal sector have done a great job in putting guidance together. I know they get a lot of flack certainly from academics on the subject, but I think generally speaking they do a good job there, and I'd quite like to see them be more actively involved in this space, because a lot of them are actual practitioners as well, so they've got both sides. Well. Yeah,
exactly that. Well, thank you guys. We've wrapped up another one, so thank you ever so much for your time today, and we'll look out for the next episode going live.